Good day, traders, and welcome to Forex Street webinar Murrey Math Swing Trading. My name is Nenad, and today I will present you Murrey Math Swing Trading System, which is based on Murrey Math lines and Murrey Math principles. This is swing trading method, and it's suitable for both part-time traders and traders who cannot babysit every single trade. Okay, before we begin, as always, our standard is disclaimer. Online educational materials are developed by Admiral Markets Estonia for global audience. So please take into consideration that the information this session is not suitable for everyone. If you want to get a corresponding information on charting conditions and any other detail, you should visit admiralmarketsglobal.com and select your country and contact an appropriate entity. The risk disclosure statement is stating all risks associated with Forex market. By accepting the disclaimer, you're also proceeding further with me. And Admiral Markets UK Ltd is taking no responsibility for the information. This is my personal opinion, and this is used for informational and educational purposes. So Forex is risky business, and you should take it as that. Admiral Markets Supreme Edition and all other webinars are also hosted on our main website, and you can download it by logging into Trader's Room. So effectively, I'm using this every day in my trading, and I am recommending you to help in your trading decisions. Okay, so we are talking now about Murrey Math indicator. We'll be talking about Henning Murrey, Murrey Math core elements, octaves, and Murrey Math system. So Mr. Murrey was born in the year of 1942. He became master trader in 1968. He is well known in his trading trading world, and Mr. Murrey is also creator of his method, which he calls Murrey Math trading system. Needless to say, we won't be talking much about theory crafting because I will be really cutting to the chase and showing you how you should trade Murrey Math octaves. But maybe for all of you who still want to delve a little more deeper into Murrey Math octaves and Murrey Math system, you should know that the system and all these teachings are based on Gann theory. Okay. So if you understand Gann theory about price and time, you should really pay attention to Murrey Math octaves. Okay. One important thing maybe for all of you who want to, as I say, delve deeper into Murrey Math is that all the algorithms of a fraction cube are set to base of 10 to exact Fibonacci ratios. The thing is that Murrey Math does not use standard pivot points. Okay, it's not standard pivot point based system or indicator or method. It's basically based on octaves. Okay, so those octaves are omnipresent. Okay, those octaves are omnipresent, and this is how it looks like on MetaTrader 4. Okay, basically Murrey Math instructs us to divide the values of support resistance into 1/8. Okay, into 1/8. For the sake of consistency, we need to introduce notation. Okay. So Murrey Math refers to major, minor, and baby Murrey Math lines. Okay? That said, you should pay attention to major support lines and these pivot points. Okay? I will explain that a little bit further in the webinar. So Murrey Math abbreviates the term Murrey Math lines as MML. If you're still not sure about the indicator, as always, you can email me and I will send you the indicator itself. Okay, so Murrey Math is basically using Murrey Math octaves for showing the exact levels where price may turn. Okay, where price may turn. So I personally have been using Murrey indicator, and in my opinion, it's proven to be one of the best support resistor levels along with Camarilla. Okay, so it uses following parameters. Okay, P is by default on 64. Okay, now I really encourage you now to snapshot this screen so you can see this setup basically when you open the indicator itself. So default is 64. Okay, 64. It means that period in bars or in other periods is where the lines will be calculated. Okay, calculated. The lower is the number, the more current but less accurate calculations will be. Okay, so that is very important for you to know. Murrey period is set on 1440 by default. Okay, that means a basic period in minutes. Okay, we use 60 for hourly pivots, 1440 for daily pivots, 10 or 10080 for weekly, and 43200 for monthly pivots. If it's greater than 0, you should know that the indicator will use P amount of MMP period minutes to calculate its lines. So I advise you to leave the settings on default, and if you want to use on other settings, then you should use other pivot points. This system, it's very important to know that this system itself will be using 4-hour time frame to trade. Okay, we will be using 4 hour for trading. Because we use 4 hour for trading, we should use 10080 for weekly Murrey pivots. Okay, and these settings should be left on default. Okay, Murrey lines, this is important for you to know. Okay, this is very important. Murrey lines will use these settings because we will be trading swing system. We should use weekly Murrey lines. Okay, 10080. Okay, remember this, 10080. Okay, now this is the levels of Murrey lines, and they describe the following. Okay, hardest line to rise above is called 8-8. 8-8 is very hard to break. Okay, you should remember this. 8-8 is very hard to break. If the price goes above 8-8, there is a big chance that it will test 1-8 or plus 2-8. These are reversal levels, and this can really keep you from getting in bad trades, really, because you won't be buying at these levels. So these levels are solely used for shorting the market. Okay, this is important. And all new traders should definitely pay attention to shorting here, not buying, because 8-8 is hardest line to rise above. Okay, 7-8 or fast reverse line is line where the price can reverse, but if the momentum is strong, the price will proceed to 8-8. After this slide, you will be shown a slide where everything is drawn. So you will be ready to know where the price can react, where the price can bounce. And you should snapshot the screen because you will be using that setup for trading Murrey. Now, 6-8 is pivot reverse line. Okay, 6-8 is pivot reverse line. And usually when the price first touch this level, it should reverse. So the price should touch it the first, then reverse. Upper trading range, major reversal line, and lower trading range is basically where price is about 43% of the time. Okay, So 3.8, 4.8, and 5.8 is where the price is 43% of the time. Okay. Very important also to know is that below lower trading range we have 2.8, 8, and 0.8. Now we are comparing 8.8 and 0.8. 8.8 is strongest resistance, 0.8 is strongest support, right? Now additionally we will use two octaves. Okay, we will be using two octaves below 0.8 and above 8.8. Okay, if the price moves beyond 1.8 or minus 1.8 line, then there is the 90% chance that it will reverse when it hits plus 2.8 or minus 2.8. Okay, remember this, because when price goes above these lines, new octaves will be printed out. Okay, this is how it looks like. So above 8.8 we have plus 1.8 and plus 2.8, and below 0.8 we have minus 1 and minus 2. These levels will always remain the same until the price breaks through plus 2.8 or minus 2.8. Then these levels will change. Okay. Now snapshot this screen, because we will be basing our Murrey trading decision on these bounces and rejections. Okay. Many times the price will show that if it's above 5.8 line, it will generally stop and consolidate around 5.8 before heading lower. Okay. So now it's also time for you to snapshot the screen, because this is important for your trading decisions. If price is below 3.8 line and rising, it will generally stop and consolidate around 3.8 line before heading higher. Okay. Now, if the price is between 5.8 and 6.8, the tendency is to bounce off the 6.8 and retest 5.8. Okay. So as I already said, if it goes above 1.8 or below minus 1.8, then it will reverse. But guys, trade the first touch. It's if you followed my webinars with Admiral Markets, namely session recap, you know that I always say the first touch of the level is most profitable one. The first touch of the level or the zone. Okay. So that same first touch is always respected the most. Okay. Always. So do not hesitate to enter the market if it's an agreement with your system. Okay. So, and finally, if it moves beyond or below plus minus 2.8 respectively, it will create new octave for that particular time frame. Okay. And this is now important. Many of you are led to believe when the price goes above strong levels, above plus 2.8 or minus 2.8, that you should sell or buy. It doesn't go like that. Because guys, you want to sell into resistance and you want to buy into support. Okay? It's always important for you to know. Because when you're selling resistance and you're buying the support, first of all, you have much better risk to reward ratio. But it's not just risk to reward. It's effectively selling higher, buying lower. It's always the same in your everyday life, right? If you want to buy, for example, a same car, so let's say that you want to buy a new car, right? And for example, one company will give you that car for $50,000 and another company will sell you that for $55,000. And you still, and the conditions are still the same, right? You have the same model, right? Everything is the same, full package, right? So will you buy really for 55 or you will buy it lower for 50? It's same in the market. Why would you buy the market here when it's already overbought, you want retracement to happen. And then you want to see rejection. After rejection, only then we are looking at our charts to confirm the trade, to see and to speculate whether the price will continue to move down or it will really reject from this level. Okay? So this is usual pattern in trend. This is usual pattern in downtrend. So this is how we will base our trades. Now snapshot the chart, because after this slide I will be opening a live chart. Okay, I will be opening a live chart to show you exactly how you should base your decisions, right? Okay, so effectively you're looking at Murrey octaves. So first of all, you're looking at Murrey octaves, and you need to see what will happen after the price has touched one of these levels. Okay, so you need to know, and you should always pay attention to where the price is gonna be sold and where the price is gonna be bought, right? So effectively, best is to buy from these levels. Okay, you can try to sell from these levels, but only after the price has rejected. Okay, and you want to sell from these levels, and you should always buy from 4.8 if there is confirmation and the price is above. Okay, maybe it sounds a little bit complicated, but these levels are meant to be traded like this. So we really want to focus our attention on a proper setup before we enter any trade. Now I will be opening my live chart, okay, and I will be showing you the exact template, right? So this is how it looks like. Okay, this is how it looks like. We should open 4-hour template and watch reaction, guys. Okay, if you were following previous slide, you can see that 4.8 is meant to be sold after the price comes from below rejecting this region. What happens is effectively price came from 3.8 to 4.8, and then you see a big rejection. But that is not the time when you blindly enter the trade. You should not blindly enter the trade. First of all, you need to have awesome oscillator on the chart, and you need to have trend momentum on the chart. Now, this is custom-based indicator, and I'm guessing that you don't have it. So if you're interested, as I say, in this system and this indicator, of course, I will send the complete template by email. So you just need to email me, and you will get this, of course, for free. So using Murrey simple principles, we know that 4.8 is a major resistance, especially when it comes breaking 3.8. Mind you, however, that my Murrey indicator line shows 10.080. Why 10.080? Because Murrey lines are traded on 4-hour time frame, and we need to use weekly pivot points, not daily pivot points. This is swing trading. That is why you should put 10.08 on 4-hour time frame. Okay, I haven't tested it on lower time frames, so I cannot tell you that it's very effective on lower time frames, but at this point it's effective on 4-hour time frame. Okay, now so pay attention. 4.8 is rejecting the price. You need a confirmation of both of these indicators, and this is your confirmation. So you should short it here, because the price has rejected from 4.8, and awesome oscillator turned red, also trend momentum turned red. So you should align both of these indicators in order to enter a short trade, guys. Okay, so red, and bang, down we go. Okay, down we go. Now, I strongly advise you to use trailing stop, because trailing stop will save you from losing an already profitable trade. Now, guys, do not give me your emails now. I will send you my email and you just need to make a request. I will write my email here. So it's tarantulalafx@gmail.com. Okay, so this is my email. Please send the request to this email, tarantulalafx@gmail.com. So this is one of the examples. Now, what did we say? If the price comes rejecting 4.8, we don't want immediately to buy it here. Sometimes we will get the opportunity, but you need to pay attention to what your indicators are saying to you, okay? Now, watching the system, we can see that our first potential trade of this level was initiated here. And it was successful, you see? It was successful for 120 pips. Logically, stop loss should be placed either below the setup candle for aggressive stop loss placement or below last swing low. So here, so you should decide it based on your risk. I would usually place my stop loss below this candle and trade this with lower risk. Okay. So let's see another example. Okay. Price came from 2.8 to 3.8. Now, guys, what did we say? When price initially comes from 2.8 to 3.8, do we sell it or buy it? Of course, guys, that we sell it. So this was initial, let's say, touch of the level. Sometimes you will not see a perfect touch of the level, but it's very close. So you should always use your logic. And this was your confirmation of a short trade here. Okay. And after some time, the price went something like 100 pips in your favor. Okay. Let's see other pairs. Let's see dollar yen, for example. Okay. Now, logically, guys, what did we say? 8.8. I know that many traders are suffering from buying resistance and selling into support. Now, I really encourage you to visit all my webinars, and I will be holding all sort of webinars on Forex Street also by using my principles of money management, risk management, and I really advise you to watch my session recap trades. Because so far on session recap trades, we have had more than 150 pips average profit. And as always, I always share results before each webinar. So my main principle, how I trade, is always sell into resistance until resistance becomes support. Okay? Mr. C is asking, where is session recap? Admiral Mark is session recap webinars each Monday. You should just click the website and sign in. It's very simple. And you should always be profitable just by only watching and trading how I suggest. Okay? And these webinars will help you to understand the core of the price action, guys. Do not buy into resistance until resistance has become support. Now, logically, here you see this is your trade here. You need to be patient for these kind of trades. This is swing system. So this is your trade. This is another opportunity, guys, for you to trade here. See? And look at this. The price rejected from 8.8 to 7.8, 6.8. Almost touching 5.8. Now, if you compare previous slide, you will see that this is the case. This is the case when you trade as a professional trader. I don't know what other people are teaching you, what other people are telling you, but never ever buy resistance until this resistance has become support. Sell higher, buy lower. And these Murrey math lines are scholastic example of buying lower, selling higher. Okay, so selling higher, buying lower. Okay, what did we say? 6-8 rejection, guys, right? 6-8 rejection. Initially, price has fallen to this level. And you see, use your knowledge. This is doji. This is indecision candle. So the price might turn to the upside. Okay? This is your entry. Okay, you should believe it. Some drawdown will always happen. Okay? But look at this. 77 pips at this point. 77 pips at this point. Okay? If you followed my analysis, which I also published on Forex Street, dollar CAD trade, last dollar CAD trade gave us more than 120 pips. Why? Because we were buying from support after the price has retraced. We won't be buying here or here. We want to see a confirmation. New Zealand dollar, guys. New Zealand dollar. Okay? Did you see my analysis today? Okay, the price has already made some 15, 20 pips rejection. Okay? From my analysis here. Why? Because we want to be selling. Okay, I was using my Camarilla MACD method, but the principle is the same. Sell into resistance. We don't buy into resistance. Okay? Let's see some examples, guys. And as I say, for these kind of setups, you need to be really patient. Okay. So this is pretty much, see, this is at a support. And it can reject from these levels now because it's 1.8. I would like to see other example. For example, some pairs which have taken a test of resistance support. Okay, here, the price has been going from 3.8 to 4.8, right? Here, we have a confirmation, possible confirmation. And this is your trade here. It's 120 pips possible. Okay? Now, this is your confirmation at this point that 4.8 resistance has become support because price is rejecting it. Here, price is rejecting it. You want to buy it. Okay? This is your buy trade, guys. So use the trailing stop, 150 pips. It's not that bad, right, for swing trades. Always use your logic. Always use what your logic is telling you. Okay? Do not just look at mechanically at these levels. You should always be paying attention what your primary logic is telling you to do. If you see rejections, then treat this rejection as it is, because you don't want to be caught in a trade you're not able to manage. I have witnessed many times that traders just cannot go with their risk management. They are just adding to positions, and then when they're in a big loss, they really suffer from a psychological breakdown. First of all, you don't want to suffer from any psychological breakdown. You want to be always at the winning side. And I'm not talking just about winning in the Forex market. I'm talking about winning even when you're losing. Now, you might ask, how is that possible? It's very possible, because even when you are losing the trade, you still have the capability to exit without a big loss. And it's always like that. When you're trading off support resistance lines, confluence points, there are literally thousands of ways to be profitable in Forex market. Believe me, guys, thousands of ways. I am not the smartest person in the world. And I cannot say that I'm the best trader in the world, because there are so many great traders who can really give you excellent knowledge. But one thing is for sure, I stand before all of my results, which I have been showing every time before session recaps and after session recaps, on my tweets and on my analysis. And this is what makes me also a strong trader. Knowing when I'm in a loss and knowing when I'm in a profit. I always analyze my losses. I'm not 100% of time profitable. It's stupid. No one is 100% profitable. Do not ever anyone fool you for that. But the thing is, when you know how to deal with your losses, you will be on a winning side. Even when you lose a trade from time to time. It's normal. It's how things go. Let's find another example. Do you think this is a short trade here? Okay. 3.8 to 4.8 from below to the top. So the price has been going from this level here to this level here. And this is a shooting star. This is pin bar. Okay, this is called pin bar. This is rejection candle, guys. Okay. Let's see what rejection candle has been telling us. Look, immediate confirmation here. And bang, down we go. Almost 200 pips. Now, I placed parabolic SAR or PSAR, SAR indicator, but I'm not sure. I think that you can go with trailing stops once you're in profit, but at this point, I recommend you to monitor the trade on demo account and then try to trade it as you would trade it on live account. So you would usually know where the price is going to react and when the price is going to be continuing with your profits. Okay? Let's find another potential trade. Let's use other pairs. You can trade every single pair. It doesn't matter. Euro, New Zealand. Okay? Euro, New Zealand. 1.8. Well, guys, 1.8. Look at this. Do you know how this pattern is called? Does any one of you know how this is called? Very simple, guys. This is elementary trading. Okay? I want answers from you. Do you know how this is called? When price is making this pattern. Range. Yes. Mr. C, Mark, Faya, Jorge, Armando. He is saying range, compression. Indeed. Compression is effectively consolidation. If you know market cycles, I won't be talking about micro cycles, but after compression and consolidation, there is usually a breakout, okay? And indeed, you see where is it happening? It's happening exactly at 1.8. Okay, do you remember what 1.8 is? What did we say? 1.8 is place to stop and reverse. So it's support, guys. So you are waiting for a confirmation. You want to buy from this level, okay? And immediately after the trade broke above this line, even before, you had cues that the price will proceed. And where did it proceed? Look at this, 2.838. Mr. Murrey is excellent in his Murrey Mat pivot points, Murrey Mat lines. This is indeed one of the examples how the price tends to react strongly at these levels. Look at this, 1.8, bang, straight to 3.8. Okay, let's randomly pick up the pair and we can conclude the webinar, so you can ask me any question if you want. Guys, look at this scholastic example. Well, this is basically no-brainer trade. Minus 1.8. Okay, what did we say? 75% of the chance that the price will reverse here. Okay, we didn't have any confirmation at this point, but this is so clear. The price, without any indicator, this was a rejection. This was a rejection. Okay, now obviously from this point here, the price tried to go to the upside. Okay, And you see it was in a big drawdown, then it came a small profit. But I would never, this is a good example, because I would never tell you to trade this. Why? Just because of this. When you see this, guys, stay away from the trade. You don't trade this. This wick is much stronger than this whole body here. Because this indicates that there are now moment buyers which have been fooled. Probably the price will continue lower. And where should you place your stop loss? Right here. Guys, 600 pip stop loss. Never ever trade this. Stay away from this. This also indicates so-called stop hunt or stop grab. When a lot of traders are taken with their stop losses, price tends to gravitate towards next support. It's called stop hunt or stop grab, and it's called a gravitational pull. Okay? Now, I don't have the time to completely describe what my trading is based on, my analysis, but it has to do with everything, okay? So this is gravitational pull towards this level. Now, this was rejection, but now moment sellers know that at this point, just compare the slides, and you will see that the price tends, when it hits this level, it tends to sell from this or this region. And now there is a big chance that it will proceed down. Okay? Australian dollar yen, I need really to show you this, because Australian dollar is heavily connected to Chinese market, okay, and Shanghai and Chinese A50 index. I also analyze equities, and I know a lot about equities, but I don't trade it and I don't post official analysis. But Australian dollar yen is heavily correlated to Chinese market. So you should always pay attention to equities market when you trade Australian dollar yen. I have made a comment a couple of days ago on Forex Live. You can check it, why Australian dollar has fallen strongly. You just need to check history. Look at the history. Do you really think that history does not repeat itself? Look at this. Me and my friend have been commenting on this, that if you really want to trade and you want to make a big trade, this was the time to short. More than 2,000 pips, because history repeats itself. Look at this. Okay, but that is a subject for another webinar. I just want to say how important is the history of historical buyers and sellers versus now moment buyers and sellers in Forex market, which is not the case in indices, because indices are a group of stocks without clear support resistance levels. But in Forex market, it's clear you only have two pairs, right? And history will and have been repeating itself always. Okay, 4 hour time frame. 4 hour time frame. 6-8. Okay, 5-8 rejection to the upside, and look at this, immediate rejection from 3-8. Okay, you don't want to trade this, you want to trade 4-8. What did we say? Rejections from down levels to 4-8 usually tend to reject. Where is the confirmation? Okay, here is your confirmation. Towards 3-8 and later towards 2-8. So guys, this is what I had for you. I really hope that you enjoyed this webinar. Unfortunately, I don't have enough time now to explain how all the things in trading are connected to not just micro and macroeconomical politics, but also connected to everything in Earth. Do not forget that 6 to 1.8 golden ratio is omnipresent, not just in our trading world. It's also present in the whole universe, right? So that will be another time. But the overall point of this webinar is history tends to repeat itself. Murrey math lines and everything you see is based on history. You want to align present with history to give you the future, okay? Okay, you're aligning, remember this, guys. You're aligning the present with the past to give you the future. Okay? 1 plus 3 is 4. 3 plus 4 is 7. Okay? 4 plus 7 is 11. 11 plus 7 is 18. Past, present, future. Fibonacci ratio. Everything in the universe is connected. Okay? So if you have any questions, do not hesitate to ask me. If you want this template with these indicators, just email me. I will be glad to send you. As always, you can always watch my webinars with Forex Street, with Admiral Markets. You can read the analysis on Admiral Markets, Forex Street. Okay, we have a good cooperation with Forex Street. They're really professionals. One of my really favorite websites, forexstreet.com, and I'm really glad to have them as support in these webinars. Okay, so guys, thank you for listening. I love when you don't have any questions, because that means that everything is clear, and that is really good. Again, sorry for sound problems. I really don't know. I always have a best possible setup in my trading room, a couple of monitors, laptop, 2 independent internet connections, 2 independent Ethernet cable connections. Everything has been set up, but sometimes, well, it happens. Okay. Thank you. I'm here with you soon. And as always, guys, cheers.